results properly to make a judgment on the success of our turnaround, as we call it today, 1.0. Instead of me quoting about it, I would like you to infer itself after seeing the efforts we have put in and by the results we have achieved, which will be covered shortly by Balaji. 2018 has been a hallmark year for us at Tata Motors, and I'm sure 2019 will be an equally or even more exciting time for us. You would have realized I mentioned it as the turnaround 1.0 to clarify that the turnaround is not over yet. Not till the time we have sustainably fixed our market position in terms of market share, but also financial bottom line. Taking you back to the last year, I had referred to the turnaround as a short-term phase of 6 to 9 months. As we have just provided the proof of concept, we have no option but to continue our best efforts in the form of a turnaround 2.0, to structurally improve the business, in particular also to add the passenger vehicle fortunes to our effort. The passenger vehicle can't be left out of the mission, which needs to be built its future as a self-sustainable unit. Our fiscal year 17-18 had one common theme: a single-minded focus on execution. And this would be carried forward to the fiscal year 18-19 too. And when you look back, it has brought us some great achievements, as already covered and shown by the video. Just give me the chance to mention a few. We ended the fiscal year with 35% sales increase in the March 2018, on the back of significant growth and an impressive performance of 23% and 22% increase in volumes year over year by our CV and PV business, respectively. Back-to-back product launches in PV as well as CV. Clearly a rejuvenation effect for the Tata Motors brand. Results: record highest sales in PV in March 2018 after 6 years, and in commercial vehicles after 5 years. A significant ramp-up of production by 22%. Structural debottlenecking of the supply chain working at the back end to end. The support and an aggressive plan on our sales enhancement. Exceptional contribution to bottom line by cost reduction efforts, enabling us to build a robust cost structure and competitive advantage as we go ahead. E-mobility aspirations got recognized by winning some prestigious tenders, both in PV as well as in CV, leading the industry in supporting the government's Vision 2030. Our new brand identity, Connecting Aspirations, has become the talk of the town. No active campaign, purely word of mouth and PR. It has really traveled the distance on its own, connecting instantly with all stakeholders. J.D. Power says CSI ranked 2 in passenger vehicles, a result of our passion to improve customer satisfaction. Let me tell you some biggest change enablers contributing to the above without getting lost in any kind of detail. The change of mindset, the evident change in mindset in the organization, the first sign of success of our organization effectiveness program was one of those. The second one, dedicated ring-fence teams with controlled risk-taking proved to be an effective working model because we crossed the boundaries got pushed, hierarchies got broken, and decisions got taken on the spot. Our PV business, bolstered by the strong performance of our new generation cars, has witnessed a strong growth, outperforming the market consistently month over month. The Tiago continues to make us proud, as it is the second highest selling hatch in the country today. The Tigor and the Hexa continue to bring new customers to the Tata family. Our focus on the growing SUV segment paid us well with the overwhelming reception given to our latest brand and nameline, Nexon. It made waves in the industry, it makes waves in the industry today, and it is among the top 5 selling compact SUVs. With the recent launch of the Nexon Hyperdrive self-shift gears, commonly known as the AMT, although it's much more than just an AMT, we have taken our market associations with IPL to the level next. The response has been nothing short than phenomenal. Going forward, we would continue to leverage our architecture strategy through the state-of-the-art architectures, as they are called, Omega and Alpha, giving birth to the new product portfolio, the H5X and the 45X. Coming to the CV front, the constant flurry of products, technological interventions kept us in the news and made us customers' preferred choice with new trust and confidence we have enjoyed over the years. With the establishment of supremacy in BS4 engines, technology interventions like SCR, new air-conditioned cabins and body-built vehicles, we garnered an undisputed positive word of mouth, leading to a rejuvenation effect for our brand in commercial vehicles. The successful launches of Toyota pickup, the Ace Mega XL, Ace Gold, and the new variants of our 37 and 49 ton in the medium heavy commercial vehicle segment helped us to address customers' immediate need and to take the aspirations to the next level. We also delivered our Starbus hybrid electric buses to MMRDA, which are now proudly commuting people on the Mumbai roads. The defining aspiration for us has also been the 20 lakh sales milestone for the much-loved Ace trucks, taking the legacy of the cult brand of Ace as an ever-young and fulfilling brand. After successful experiential marketing, we recently took the industry by surprise to lead the future of ILCV trucking with the launch of the next-gen Ultra product range of 14 vehicles or 14 trucks. It has also been a year of several firsts in terms of technology. We developed the country's first biomethane bus and were also the first OEM in India to deploy electronic stability control and advanced safety features for our medium and heavy trucks. Just that nobody gets us wrong. We are very cognizant of the fact that this is not enough, and it's just the beginning of the journey. We are well aware about the fact that it is just the first few green shoots, and we can't be complacent. And we are constantly on our toes to keep the momentum on our side, and at times to even surprise competition, and hopefully, in a positive way, our customers. In a nutshell, turnaround is the new way of life at Tata Motors. It's now in our DNA. The turnaround will continue to enhance the organization's effectiveness, enabling greater speed, simplicity, and agility in our efforts. I can assure you that our future pipeline is full of attractive products, bundled with the most desirable and customer-centric service offerings. Our fiscal year 19 business plan will continue to remain robust in terms of sales, market share, and financial performance. The market has high expectations from us, and we enjoy lots of well wishes from all our stakeholders, hopefully including you. That is the most inspiring feeling, which helps us to get going, that helps us to keep going. Please keep counting on us. With this, I would now like to hand over to my colleague, Dr. Ralf Späth, to tell you more about Jaguar and Land Rover. Thank you for joining us this afternoon.
So, good afternoon, and a very warm welcome also from my side. And I would like to tell you about the situation of Jaguar Land Rover. And for Jaguar Land Rover, it was a tough year. Geopolitically, we had some challenges. And we see also challenges, especially in the UK, based on Brexit discussion, based on diesel, based on the taxes of innovation, latest innovations. And so overall, we are happy that our sales teams were able to overcome these kind of challenges globally, with strong growth in China, with strong growth in the US, but it's also quite clear overcompensating the UK and Europe. Overall a strong year. Today we are a strong company with a turnover of 25.8 billion pounds and a new height and the record in sales. Great, and I really have to say thank you very much to the team who have delivered that. And I would like to use the opportunity to talk to you, to think about a very special event. In 10 days, we celebrate a very special event. And we probably will not have any opportunity to meet us in this remaining time. And therefore, I really would like to highlight or make 3 statements. In 10 days, on the 2nd of June, 10 years ago, Ratan Tata bought Jaguar Land Rover. We celebrate the 10th anniversary. And against that background, I really would like to describe the journey we have delivered, the team has delivered. And in that kind of journey, I would like to highlight that 10 years ago, even, by the way, prior to Lehman Brothers, it was even worse after Lehman Brothers, but let's think about the anniversary. 10 years ago, we were a totally different company. And some of you, and I see some faces, know it very well, how we started the journey. And, by the way, we did our homework, so I assume also others have to do the homework. So, in doing our homework, we increased sales in these 10 years more than 3-fold. We increased turnover more than 5 times. We increased workforce close to 3 times. And overall, we have now more than 43,000 people. And we take care. We have an own Jaguar Land Rover Academy. We deliver vehicles in 160 markets on a global basis. We have an operational footprint, which is not only the UK, however, we have invested in the UK more than 4 billion, but we also have an operational footprint in Austria with our partner Magna. We are in Brazil, in China. We are going to open up in autumn a completely fully fledged plant in Slovakia. And we have engine plants. We develop and design our engines in the meantime. And quite clear, we are premium and we are the head of technology. We are introducing and we have developed and expanded our product portfolio, by the way, from 8 nameplates to today 14. And we are now with the I-Pace leading electrification. And it's sensational that a small company like we is really leading this kind of technology. We have launched the very first battery electric vehicle, premium, from a premium car company. Sensational. And in addition, I not only want to talk about that we have from a quantitative point of view increased the nameplates, but also from a qualitative point of view, we have done a lot. Velar, Car of the Year design. So the really best looking car in the world this year. Car of the Year for the F-Pace. Car Design of the Year for the F-Pace also last year. So also improved quality and improved overall. And we have won, by the way, over 10 years, more than 1,600 awards. A sensational achievement. And why do I say that? Because nothing would have happened if not 10 years ago, Ratan Tata would have bought the company Without the leadership of Ratan Tata, without the vision of Ratan Tata, and without the belief of Ratan Tata in our people, our brands, and our future, nothing would have been here today. Jaguar Land Rover would not exist anymore. And so I wanted to use this opportunity to say thank you very much to Ratan Tata, who gave us the opportunity to develop our future, to shape our future. And we did it in a very special Jaguar Land Rover way, simultaneously restructuring and preparing for further profitable, sustainable growth. And today we are on a tipping point, and I really can highlight that we are prepared for the future. And we are investing over proportionally in the future. On the one hand side, in refining the internal combustion engine and the complete product portfolio. On the other hand, preparing us for ACE, the autonomous cars, the connected cars, but also mobility, shared mobility, and the electrification. And quite clear, also for growth. And against that background, Jaguar Land Rover is very well positioned, really, to be prepared for also the tough environment we are seeing outside, and we are going for further growth in the future with overproportional investment as one team, with the heart and soul being in the UK, but also quite clear with the mission to grow internationally. Thank you.
Thanks, Dr. Alfred and Dr. Gunther. Just to encapsulate what Dr. Speth mentioned to you about the Jaguar Land Rover story in FY18, we have a short video before we get into the financials by Balaji. Can I have the video, please?
A lot of awards, and they're all very special to us.
This is the global reveal of the new Jaguar XF Sport Brake.
SUV-Modell von Jaguar.
We've maintained its classic proportions. It is Range Rover as we know it.
Launching the F-Pace SVR.
This is the new Range Rover SV Coupe.
From 2020 onwards, all of our cars will be electrified.
The vehicle is a game changer.
And we go green in Hong Kong.
Marrakesh,
Mexico City,
New York.
Jaguar right in the heart of the action.
This computer app, designed with pop band gorillas.
Jamie Oliver took delivery of a new Land Rover Discovery.
His vehicle was transformed into a mobile kitchen.
We are incredibly privileged to work with JLR.
Welcome to the Jaguar Land Rover Tech Fest.
When it comes to building these 20,000 Jaguar I-Paces, it was a natural fit for Waymo.
We can shape the future and not just wait for the future.
Great. With that, I invite Mr. P. Balaji for the financial deep dive.
Thanks, Suresh. Yeah. Thank you. Thanks for having me here, and also first time addressing all of you from a Tata Motors lens. So delighted to present the results to you and take you through the story that has been, which is Tata Motors, the group. Just a safe harbor statement there, and a fair number of developments as far as this year is concerned and this quarter is concerned, both in JLR as well as in Tata Motors. You've seen these in the AVs that came through, but a few things that stand out for me personally in terms of other developments. I think the Waymo partnership is something that's going to be a game changer for this particular vehicle that we have put out there, and JLR is going to really have significant benefits from that. And for us in Tata Motors in India here, of course, what you saw in the Auto Expo as well as the first rigid six-axle truck are something that we are really banking on. Just to now get into the numbers, which I'm sure you're very, very eager to understand, and let me peel this for you. China and India continue to shine. And as far as the rest of the world is concerned, challenging markets across the board. US continues to face market cyclicality at this point in time. But probably the call out and the area where there is significant challenge that we see today is UK. Between Brexit, between diesel uncertainty, taxation on diesel vehicles, as well as market cyclicality. So a fair number of challenges that you say. And as far as Europe is concerned, things are getting slightly better compared to what it were before. So the diesel uncertainty, which I had called out as red last time, is now actually calling it as amber at this point in time. And India, of course, continues to rock in terms of the investment that's going into infrastructure, as well as the industrial production numbers picking up. So we continue to see strong demand as far as India is concerned. And one of the areas where people were concerned some time back, which was China, that's something that we are calling out as continuing to do well for everybody. So in this kind of situation, I think very happy to report that the group has delivered profitable growth despite these challenging conditions. How does the numbers stack up overall? Volumes grew about this for the quarter. I'll come over the year in a short while. We delivered about an 18% volume growth this quarter, and which translated directly into a revenue growth of 18%. The EBIT numbers were down 130 bips as far as reported EBIT is concerned, but we'll talk about some of the one-offs that we have taken this quarter, which we had to, which I'll cover in the subsequent slides. Adjusting for this one-off, underlying EBIT was at 6.6%, down 90 bips, of course, and this fundamentally coming out of higher depreciation and amortization charges, primarily in JLR. And if you split this number into two, we saw Tata Motors standalone, which includes the joint operations as well, increase its underlying EBIT by almost 460 bips, and JLR down 200 bips. PBT for the quarter was 2,308 crores, which is down 55%, which is fundamentally coming out of the Fit for Future exceptional charges that I referred to, which almost impacted us by about 2,000 odd crores this quarter. So if you add that to this number, that is when the real underlying performance comes through. As far as free cash flow is concerned, it's a good quarter for us. We had a free cash flow of almost 8,900 crores, and both JLR and Tata Motors delivered positive free cash flows. What are the contributors? Just teasing out the revenue a little bit more to understand where the growth came from. As I said earlier, 18% revenue growth is what we saw. And out of this 18% revenue growth, 10% came from volume and mix. And translation, which is basically pound sterling coming to Indian rupee, that delivered another 7% growth. So if I remove translation out, that is almost 11% growth that we are referring to. In terms of where did it come from, out of the 18% growth, 3% growth was contributed by JLR, and about 8% growth was contributed by Tata Motors. And the remaining 7% is the same translation effect that you see. And for JLR, I think the retails were up almost at a quarter level, about 3.8%. JLR was up, and we saw strong growth in China as well as rest of the world, as I said earlier. And as far as Tata Motors is concerned, it was broad-based growth both in CV and PV at a very, very strong 34%. On profitability, EBIT was down 90 bips. Underlying EBIT was down 90 bips, as I talked about earlier. And broadly split as JLR knocking off about 380 bips of underlying EBIT from the total consolidated number. Tata Motors contributing about 240 bips, which means it is now becoming a very material play as far as Tata Motors standalone and the overall EBIT movement is concerned. And the others is fundamentally the net one-offs that we had. And we'll talk about the profitability of the others as well. For the full year number basis, I think volume growth of 11%, revenue of 9%. I just want to put these numbers in context because it's almost now we're talking about a company that is a 2,94,000 crores, which is roughly about $45 billion size of the company we are talking about, generating an EBIT of almost, even before any underlyings there, of about 11,000 odd crores. So it's quite a substantial number that we are talking about here. And if I add back, and this EBIT, the PBT has actually grown about 20% in this period. So a strong revenue growth of 9% and a PBT at about 20% growth, 11,000 crores. That's a broad headline that I would love you to remember. And one other call out there is the free cash flow for the full year basis. While it is an outflow at an overall level of about 7,300 crore, here I'm talking about auto free cash flows. What is really heartening is Tata Motors standalone has actually generated a positive free cash flow for the full year basis of almost 1,300 crores, which is happening almost after a period of 5 years. So what Gunther referred to as turnaround is actually well and truly happening and is getting translated into real cash at the end of the day. Coming to JLR performance, to give it a bit of flavor there, you've seen these numbers where revenue is up about 6%, PBT of about 1.5 billion is what we generated on a full year basis. Fundamentally driven out of volume and cost reductions and offset, of course, by higher depreciation and amortization expenses. And here again, if you remove the one-off charges that we had, the underlying EBIT for this particular quarter is more like 6.7%. And on a full year basis, that number is more like of about 4.2% on a full year basis. So that's the underlying EBIT that we have delivered. And overall challenges in terms of demand remain. So that's the only reason why you will find depreciation and amortization not able to deliver operating leverage for us. So that's the story for JLR. And country-wise, these charts are available with you. And 1.7% retail is up as far as the year is concerned. And the real call-out, the cars which all of us love, I think one that has really delivered very well for us is Velar, almost delivering about 46,000 more vehicles this year, and E-Pace, and the 18 model year rollover, both Range Rover and Range Rover Sport, though of course those are still ramping up as we speak. So the range is of course growing. So the question then comes in terms of where do you expect to see growth coming in from here? The most obvious one is what Jaguar Land Rover knows best, that's innovation in cars. And we have a pretty exciting range of cars coming through as the year progresses, and we're banking a lot on that. And one of the challenges that all of you keep asking is how are we going to address the challenges in UK with respect to diesel? And we now have a pretty rich pipeline of plans of putting electrics onto the road. And by 2019, we have a fair number of those models coming through. And by 2020, we should have all of them an electric option available, be it a BEV or a PHEV or a mild hybrid. So that whole lot is coming through as well. We talked about I-Pace, the first premium SUV. Ralph talked about it, the first premium SUV that is all battery electric. And it's now available to order, of course, not here, but worldwide. And the specs are amazing. And of course, the reviews have been absolutely amazing as well. So we quite like what we see. And the other one is a strategic partnership. Another concern that all of you have been raising is how is JLR prepared for the whole ACES disruption, autonomous, connected, electric, and shared. And with Waymo, I think we have actually answered multiple questions with one answer, because it's an all-electric vehicle. It is autonomous, and with the world leader, which is autonomous vehicles, with an order of 20,000 vehicles starting 2020, almost £1 billion order. So I think with that one statement, we have actually answered a fair number of concerns, and we haven't busted the bank to create that vehicle. As far as margins are concerned, it's another area of concern that is always there in terms of how do we intend, what is our roadmap for margin improvement. And despite all the challenges, business challenges that you see on the top, be it geopolitical, be it market, be it electrification, be it ACES disruption or high capital investment, our response is actually fivefold. One, let's grow the premium segment, because it's a good 2% plus kind of a growth that we are seeing in the premium segment. Tap into that, create those exciting new products. More importantly, specifically focus on improving operating leverage as a business and drive cost efficiencies in everything that we do. And use the modular architecture that we are going to land in from beginning of 2020 onwards to actually create the whole cost structures that we need to deliver the long-term targets there. So it's a pretty comprehensive plan that we have, and we were quite excited with what we see there, and more of it we'll talk about in the JLR Investor Day on the 22nd of June. As far as Tata Motors is concerned, I think really an exciting story out here, where revenue is up 45% when underlying EBIT up almost 460 bips. And the reported EBITDA that you see is 6%, but if you adjust for the one-off charges that we've taken, the reported underlying EBITDA is almost 7.4%, up 290 bips, while underlying EBIT is up almost 460 bips. And with a positive free cash flow for this year of almost this quarter of almost 2,000 crores. And this PBT that you talk about here on a full year basis, if you adjust for these one-off charges, actually will be positive PBT on a full year basis as well. So, and all in all, a clear relevance of a turnaround being playing out, better shares, better growth, better profitability, better cash, all four simultaneously happening. As far as CV is concerned, I think a volume growth of 34% and a revenue growth of 41% with a very clear aim to win decisively. If there's one thing which we want to summarize as far as turnaround 2.0 is concerned, I'd like you to remember three things. Number one, win decisively in CV, win sustainably in PV, and embed the turnaround culture as far as the business is concerned. And therefore, very happy to see that after many, many years, this is the first year that we have actually arrested the share bleed. We're still not celebrating victory. This is the first time we have arrested the share bleed, and we need to win decisively going forward. Also happy to report that if you had remembered some time back, we had said there are portfolio gaps that we intend to plug. And again, happy to report back, most of those have been plugged. And now the objective is to actually start creating gaps rather than just bridging gaps. And in this, we will leverage the superior SCR technology that we have to win back customers. We still have challenges as far as the supply chain not fully meeting the requirement that is coming from the market. So that is something that we'll continue to work to fix. And of course, drive cost reduction is something the game has just started, and therefore we'll continue to drive that. And here again, more of that we'll talk about when you are there in the Investor Day on the 5th of June. PV, the game is pretty exciting, where we are slightly nuancing it and saying that our objective is now to win sustainably here, because we have to get basics right and we have to get profitability right. That's an important piece there. But here again, market shares have improved for 3 years now at 5.7, and we have exited the year at about 6.8%, which is a very, very strong play there. And this has happened, the growth that you see out here has happened despite the cars declining by almost 54,000 vehicles. That's what you see in the slide there. And therefore, the existing product, the new set of products have actually done extremely well for us. And all our regions have delivered very strong growth this quarter. And the impact design and best-in-class features is something that is going to stand us in good stead as we look forward. And our focus areas at this point in time, continued product development and user experience, clear focus area, network expansion, and of course, a very clear call out on rigorous cost reduction that we need to do to deliver an early break even. With this is how we went into turnaround 1.0, which is a single-minded focus on execution with 3 priorities: sales enhancement, cost reduction, and supply chain reliability. We are now moving it on to turnaround 2.0, which is all about embedding this turnaround thinking deep into the organization, apart from the win decisively and win sustainably in those 2 businesses. An area we haven't talked about much, but something that's a great performance that is coming through is Tata Motors Finance, where we see a strong broad-based rebound happening across the board. Their disbursals have grown up almost 66% this quarter, highest ever disbursal in TMF history, with a very strong growth in new and used vehicle financing. The corporate lending book has also doubled. And a number that I would really urge you to pay attention to is the gross NPAs, which have come down by almost 14%, 14 percentage points, 1390 basis points to sub 4% as we ended the year. And this is all measured on 90-day basis. And net NPA is now actually down to 3%. So strong performance coming through on Tata Motors Finance. And consolidated PBT for the year is 291 crores, which gives you an ROE of almost 17%, which is a pretty strong set of numbers by any standard. So what's the outlook that we see? As far as the context is concerned, demand, we expect the global markets to remain challenging. Uncertainty in UK is likely to continue for a while, and as well as in Europe because of diesel and Brexit. Cyclicality in markets in the US is likely to continue for a while, and of course China we expect to continue to remain strong. As far as India is concerned, we are optimistic on the demand side. 2 things that's really working in this favor is higher infrastructure spending and better enforcement of overloading regulations. That's really working in as far as the benefit of the business is concerned, and higher GDP growth, which all of us have seen. The 2 areas which do cause a little bit of concern is inflation as well as interest rates, because these are very, very important for the auto industry, and therefore these are something that is a right, a cause for concern. But on balancing out concerns with opportunities, we remain we remain optimistic on the demand side. Commodity costs are expected to be higher, And that's everybody is seeing it. And of course, investment needs likely to remain high as far as this particular immediate future is concerned, led by ACES as far as JLR is concerned, BS6 as far as Tata Motors is concerned, and new products as far as both the companies are concerned. So if this is the context, what's going to be our response? As far as JLR is concerned, we'll continue to invest almost about £4.5 billion this year on new products, technology, and capacity to drive long-term sustainable, profitable growth. That's a clear call-out. We also expect to see higher sales growth with improved profitability in FY19. And we expect this performance to improve gradually as the year progresses. We are planning in a range of about 4 to 7% EBIT post all the policy changes that we're doing on the accounting side, which we can cover in greater detail offline if needed, and between FY19 to FY21, and 7 to 9% over the long term. The PDC policy change, product development cost capitalization, is impacting EBIT by almost 1% in JLR, and therefore it doesn't impact free cash flows, and that is the only reason why the over long-term number of 7 to 9% is the same 8 to 10% that we had earlier, just that we are now giving far more tangibility to how we'll build the steps to that number. On Tata Motors standalone, of course, focus is very, very clear. Continue to drive all-round performance through Turnaround 2.0 while continuing to invest for growth. We are planning for about 3 to 5% EBIT post all the policy changes that we have done between FY19 to 21, and 5 to 7% over the long term. And thirdly, of course, complete all the actions coming from all the Fit for Future portfolio decisions that we have taken. We have a few assets, if you look at our balance sheet, which are held for sale. Tata Technologies, Tata Hitachi. These are things that we need to ensure that we complete those decisions and release the cash. And as far as the group is concerned, we are committed to competitive, consistent, and cash accretive growth over the medium to long term. And in our approach, how we intend to do that, launch exciting models, drive cost efficiencies and operating leverage with affordable investment spends. That's what I had to say. With this, back to you, Suresh.
Thanks, Balaji. I'll request Gunther, Ralph, Girish, and Mayank to just join on stage for a quick Q&A. Can we have house lights, please? And some mics, yeah. Yeah. Yeah, I'll come to you. I think my friends already know the drill, so please do raise your hand and the mic will come to you. Kindly keep your questions short because I need to respect the entire audience forum here, and we're also running tired, so I need to maintain that. So we'll start with Priyanka, since you raised it first. Can we have a mic here, please? First here. Introduce yourself and the question that you need to ask, and the official. Yeah.
So Priyanka Iyer here from BTVI. Here. So my question is to Mr. Balaji or Mr. Speth. I just want to understand the EBIT margin target that you have set. How is the raw material cost being counted in that, because the raw material costs that are rising? And also want to understand that how do you see the UK scenario changing? You're saying it's going to remain challenging. So how will the margins be achieved on that front?
So let me take the first one, and Ralph will pass the second one. As far as margins is concerned, we talked about the various opportunities that we have in front of it, be it premiumization, which is better models. We're talking about growth, because one of the reasons we noticed why JLR had a bit of a challenge this year was the volume growth. So growth is a very important piece. We're looking at cost efficiencies across the board, both at the contribution margin level as well as the fixed cost level. And of course, lastly but not the least, when you're looking at areas of opportunity of design, and this is particularly true for Tata Motors, for instance, where when you're looking for ironing out and designing out costs in the way our vehicles are configured. So we're looking at all elements of cost to actually generate the margins, and we will definitely look at also at the going forward in life. Look at one of the things that we have taken. Why did we take this one-off cost that we had? Because we are looking at capex giving into an affordable envelope. So the policy changes that we have done on the product development cost is also coming from being clear that going forward, projects, though they may have a business case, we will take them on only they fit into the affordability envelope. And on that basis, we had to take a charge on some of the projects that we don't intend to take forward starting from now. And hence, therefore, to save cash going forward, we've taken the pain today. And now that we have done that, we also expect, therefore, absolute depreciation amounts to also start getting optimized as we go forward. But it is a journey that we see. That is the reason you'll see a stepping stone kind of a margin plan that we have put together. And we hope to stick to that particular plan.
So just to understand, you say that the cost-cutting measures that you are taking will offset the rising raw material costs, or will that translate?
Because in take commercial vehicles here today or passenger vehicles here today, we have already taken up pricing. So pricing, VME optimization, every line of the P&L will be used to deliver that particular number.
I think I don't have to add anything from my side, but you, the question was, if I understood it correctly, you also want to talk about the different PT capitalization with amortization and depreciation. So
but you want to talk about UK as such?
Yeah.
Like, challenges in UK, how do we intend to address?
How do you plan to counter?
Sorry? Yeah, in principle it's exactly the same. But please be aware, we are absolutely confident in our strategy, and we are going forward, as I mentioned earlier, with this kind of three-step approach. First of all, we strengthened our product portfolio, and we are rolling out more interesting products. We had, by the way, a very difficult, very challenging year last year, because we had more or less 5 different launches, and we are stabilizing the business, and we are going ahead. In the internal combustion engine, you have seen that we have done the very first steps in electrification, and we are rolling out now all the electric vehicles, and from 2020 onwards we going to offer a choice for the customer to really think for all new cars what kind of propulsion system he really want to have. And therefore the best way is a very good product, and based on our best British design and this compelling combination with engineering integrity, I guess we go exactly in the right direction.
Deepshika from ET now. I think to Mr. Speth, just to add on to what Priyanka asked, I just want to get a sense of how we are looking to turn around GLR, considering that you just said that you're looking to add new cars to the portfolio, but 3 out of the 13 cars are posting growth for GLR, and the SUV, the premium SUV segment is not getting any less competitive. So how are we going to see GLR contributing successfully to the Tata Motors brand again, and what are the exact steps we are taking to make sure that the cars that are already existing will post positive growth going forward?
Very good question. By the way, I don't have talked about a turn around. That was he. So I guess we don't need a turnaround, because we know exactly where we go to. We know where we stay. We know our position, and we know exactly the way forward. The strategy is fixed.
Just to add to that, I think as far as JLR is concerned, this year the PAT is almost, the PBT is about 1.5 billion. So I'm with Ralph in saying there's no turnaround needed. Right. What we need is acceleration. Yeah. And as far as the growth is concerned, models are a big one. As he said, last year was 5 models coming through in a year. You're stabilizing a lot of them this year, and you'll grow from there. Premiumization continues as a journey there. Let's not forget that Land Rover is the SUV. Yeah, there could be competition in that market, but Land Rover is the SUV. So therefore, we need to be careful before we just say there's more competition there. But yes, from a profitability perspective, one of the reasons why we had challenges was that your depreciation, amortization, and other fixed costs, since volume growth wasn't coming in, that is there.
Can we have an outlook on volumes, please?
We aren't giving an outlook on volume, but I've given an outlook, not an outlook saying plan that we are going ahead with, so you're clear how we are internally planning. That's what that number is, because finally you're looking for that. And this is now building on the number, and you also talked about growth is likely to be better next year with improved profitability. We can't get more specific than that in terms of how we're looking at FY19.
I have another question. This is for Gunther and Mr. Parikh. I just want to get a sense. There's been some reports suggesting that the Indigo and the Indica are going to be discontinued, considering that they aren't posting great numbers for Tata Motors. Can we have a comment on that, please?
We've issued a statement to people who have reached out to us. Yeah. Mic volume. Switch on. This is the other one, no? Yeah.
Product has a
that's too loud.
Each product has a life cycle, and it follows that pattern. So yesterday we issued a statement that we are discontinuing Indica Indigo, and they have been replaced by so many other vehicles. So in fact, we are the only company in India which has launched 4 completely new brands in last 18 months, 24 months. And you can see the last 26 months, Tata Motors has been outperforming market by almost 3x. And we hope to continue that.
Yeah, Kevin.
Hi, Kevin from CNBC. One question for Mr. Balaji and one for Dr. Speth. Could you take us through where your debt currently stands at? It's seen a spike this quarter. What are you spending on? And for Dr. Speth, China has cut the import duty on imported cars to 10%. What sort of benefit can we see going forward for JLR?
If you notice that the free cash flows on a full year basis is negative at an overall consolidated level, that is what is contributing to the similar amount of debt increase that you see. And very clearly, the fact that we are calling out cash accretive growth on the medium to long term means that we are not comfortable with the debts that we see, and therefore that is something we will definitely take out. One thing I haven't had time to take you through, but something that we will cover it subsequently, is that clearly Tata Motors Group is a 6-cylinder engine. It needs to be looked at as a 6-cylinder engine. There is JLR, there is CJLR, 2 cylinders. There is CV, there is PV. Then there is Tata Motors Finance, the 5th engine. And the 6th cylinder is all things net debt, subsidiaries, everything else, which I call as non-core investments that we have, which we need to have a clear point of view. And we are very clear that when we called out Fit for Future, we have looked at assets, we have looked at policies, we have looked at investments and portfolios. And we have taken a call on each and every one of them. And that's the reason the policy got changed on the capitalization. The fact that we have taken a charge on some of these things led out of that policy meant that we have taken the tough call and cleaned it out. And as far as the investments are concerned, if you take a look at my held for sale assets, Tata Hitachi will be disposed. It's already held for sale. So these non-core investments, when we dispose, we will use that cash to pay down the debt.
What is the absolute number of your net debt right now?
17,000 odd crores. Auto.
Yeah.
How much will you reduce it by?
Shah, wait, please. One at a time, please. No.
So how much can you reduce your debt by?
Sorry, there was the second question.
It was a counter question.
Hold on, there's a part 2 to it, please.
So whoever is, so I will take it. China, as you know, we are very much engaged in China. China is a very important market. It's the biggest car market on earth. We have built a plant there with our partner Chery. And so we have imported cars as well as local cars in China. And what we really see is an unbelievable speed in the Chinese market, and President Xi is really going in the right direction, in opening up and really, let's say, going forward for free and fair trade. And the reduction, the 10% reduction of this kind of tax reduction for the imported cars means at the end of the day that we also will follow that the vehicles, the imported vehicles for the Chinese customer will become cheaper. And it will be also quite clear, included the one or the other optional, let's say, additional feature in the car, so that the Chinese customer will get more vehicle for his money. Very, very appreciated, I guess, in China, and we are following this policy. Now, at the very moment, it's also quite clear this kind of duty reduction was more or less announced yesterday and will be in place from the very 1st of July onwards. So at the very moment, we have to see what is going to happen, because it's quite clear, I assume, that for the next 6 weeks, sales in China will be critical.
Yeah, Sajid.
Hi, this is Sajid here from Bloomberg Quint. Yeah. My first question is to Speth. You spoke about the China factor here. What percentage of your sales in China is between import and locally made? If you can give us an idea of units there, because you have your competitors BMW and Mercedes importing into that market. So, as you said, next 6 weeks is going to be something you're going to watch out very carefully. So, if you can give us a breakup of that. To Balaji, can you give us an idea of what was the profit after tax for JLR for the quarter? We saw the PBT number, but not the PAT number there. And finally, for Gunther, you spoke about the arresting of market share in CVs. What is the target that you have for FY19? Last when we met, you said we'll speak about it at the financial results.
So then let's do it according to your sequence. I start with China. In China, we are producing at the very moment 5 vehicles already, and we are producing and selling around about 85 to 90,000 vehicles. Overall, last year we have grown by 20%, which means we have sold more than 150,000 units.
Just to clarify the point further, roughly about 55-45 import local manufacturer as far as JLR is concerned. And your question to me was on what are the PAT of JLR? Roughly about 1.1 billion.
I think you most probably addressed the easiest question to me, because you know the answer already, that we usually don't comment on the market share aspirations, which we do have. And we are not going to break the rule just because of today's event. You will see how we develop and that our aspiration goes beyond what we have accomplished in the last fiscal year is on the basis of what has been explained in my short introduction and also by the statements made by Balaji. I think that gives you an idea where we are and where we are set for growth. And that's what Turnaround 2.0 is all about in CV as well as in PV.
Yeah, the fact that you have called out, just to build on that point, the fact that you have called out win decisively in CV means it's a mindset with which you want to operate, and therefore it's going to be an all-around performance that you would be looking at as far as CV is concerned, and so that's the way we take it.
You mentioned the fact that the turnaround is not complete because we haven't achieved what we wanted in market share and profitability. So what is that? What you want to achieve?
Yeah, that's it. That's exactly our aspiration. That drives our business plan in volume and bottom line improvement. So overall performance, but you will not get me to this market share figure because I rather would like to celebrate with you whatever kind of gain we are going to see, and we will certainly gain during the course of this year in PV and CV, than to actually get a delta report against my commitment or my statement made today.
That's why I called it Turnaround 2.0. For him, it's not over.
Okay, guys, we are running short of time, but I'm going to have Sanjay, Sumantra, Sumant, and you. Last 4 questions.
So with Sanjay from Bloomberg News, with the developed markets the sales at the developed markets for JLR seems to be very gloomy. And are you